Shares of Telus are trading higher, Scotiabank upgrading. We've also saw it incrementally positive on BCE, though they're not ready to upgrade that. Ryan Bushell is president and portfolio manager at Newhaven Asset Management. He's been buying some of these telcos. Joins me on the desk now. Thanks so much for joining me.
Thanks, Amber. Thanks for having me.
So it seems like the reason for this upgrade is the fact that the CRTC was not aggressive in the way that they're pricing the interim rates for these telcos. And that's been kind of an open question, whether the incumbents are going to be able to get a return from some of the investments that they've been making. How much of a game changer was that for you as an investor?
Well, I wouldn't say it's a game changer, but it's nice not to be sledding uphill any longer. Hopefully we're at the inflection point from the regulator. They've been pretty tough on the telcos, and we thought this would happen, especially post Rogers Shaw. We thought the regulator now has kind of Bell and Telus are teamed up on their wireless network. Now you have Rogers and Shaw together. The regulator kind of has full reign to be more aggressive with them. Next year, potentially with a change in government in Canada, combined with this latest ruling, hopefully the path gets a little bit easier for here, at least on the regulatory side for the telcos.
You think conservative government is better for the telcos?
I think so. Yeah, I think when you look at more free enterprise, the telcos are spending a lot of money in Canada. BCE, with their latest fiber package, $20 billion over 10 years. That's a major investment in the country and a major investment in labor and equipment and all of that. So, I think that hopefully we'll see a little bit cleaner regulatory path for the telcos going forward. And again, these investments they're making have big payoffs down the road that the market isn't focused on yet, but we see kind of happening over time.
I wonder if that conventional wisdom that conservatives are better generally for business and telcos in general is complicated by the fact that the conservative leader has been actively tweeting, particularly against BCE.
Yeah, it's again though what we would say is that the regulatory backdrop at some point has to encourage investment in this sector. And if you look at the pandemic, these companies, similar to the way that the banks made the Canadian regulator and Canadian government look good in 08, 09, the telcos made them look pretty good during the pandemic. We had everybody all of a sudden working from home, massive change in the flow of data, and the country needed to keep working, needed to keep operating. And the investment in the networks that had been done previous to that point supported that process. So again, the mergers were one thing. I think that's the reason why we've seen some more aggressive behavior from the regulators more recently. I think as that levels out, to me, if I was the federal government, I'd be looking at the banking sector and the mergers that are happening there, National, CWB, RBC, HSBC. I'd be looking there for maybe some different regulatory stance.
And I want to pick up on that point as it relates to politics, but first, just to complete our thought on the telcos, where are you looking? What are the opportunities? Is it all three of the telcos? Are you including Quebecor in there?
So we don't own Quebecor, just a little too small and a little bit too much capital investment risk on the wireless side relative to the size of the company. Again, we try to be very conservative, but I think there's a good case to be made for Quebecor. Rogers, we don't own. We sold it kind of a while ago near the highs, and it's been down from there. This most recent deal they did, selling some of their wireless backhaul, and the details are still scant on that, but $7 billion is a big number for a minority stake, right? So again, that speaks to the hidden value in these companies whereby there are pools of capital, pension funds, private equity funds, et cetera, that are looking to gain exposure to the data pipes that these companies have in place and are willing to pay a pretty good number for it. So that's the basis by which we've been adding to BCE and Telus, given their dividend yields. But Rogers is something I'm looking at, given it didn't react on that deal. I think there's some hidden asset value there as well.
On BCE, do you think the dividend's sustainable?
I think it is if they do the right things. Again, there's some big wins out there down the road on, first of all, they can do a deal just like Rogers did. It's smaller because they only own half the network, but there's towers, there's other infrastructure deals, but down the line, copper decommissioning is a big win for these companies, meaning the landline network, once they get fiber to the home up to a certain point, they can start decommissioning that network, which is a cost center for them, but there's also a lot of real estate exposure that they could resell. So there's some value there that could help to sort of restore the balance sheet and prop up the dividend. But we'd like to see them pause on dividend increases for the foreseeable future and just get their balance sheet under control.
Let's go to the banks, and your comments said maybe that's a new sector of focus. I mean, are you thinking that they push for those deals? They'll be long done in theory. by an election? Are you saying there's a risk of an unwind, or how are you thinking about that,
Not,
or a pause and further consolidation?
Yeah, not an unwind on those deals necessarily. I've been surprised at the speed at which they've been approved. I think, again, if you're looking at the Canadian economy and potential wins for the government, especially in a world where mortgage rates have increased, the banks have seen a big run in their share prices. They're a much bigger sector in terms of the economic might and market cap relative to the telecom space. To me, there's bigger wins to be had there if the government wants to take a populist stance on something.
On the banks regarding elections, there was a note out, actually it was by Scotia this morning, talking about how the U.S. election could be positive for the Canadian banks, only because it seems like the Canadians are the only ones going it alone, or the regulators going alone, saying we got to increase the capital requirements. The U.S., there's been extreme pushback there, and OSFI itself has acknowledged we can't do this in a vacuum. Could the U.S. elections and whatever the fallout is around banking regulation, if it's easier, particularly under Trump, be net positive for the Canadian banks?
Yes, definitely. I mean, there's those
enough to matter.
Those capital rules. Yeah, it's hard to say. I mean, it would depend on the pace at which they rolled it back. I mean, obviously, a complete reversal and drawing down of those capital requirements would be at least a short-term net positive. And I'm not the greatest on capital rules and how it impacts earnings, so I'll limit my comments there. But one thing I'm very concerned about as it relates to the U.S. election, and you've seen it as Trump's odds have been increasing more recently, is the increase in 10-year rates and the fiscal policy matchup with the Fed stance. And so one thing we've been watching very closely is we've said, we're concerned that these interest rate decreases we're getting at the short end will ultimately be self-defeating. And you saw that when the Fed cut 50 basis points in September, that was the bottom on 10 years, and they went from 365 to now almost 430 this morning. They touched 427, 428. And so if that becomes kind of unglued, that is more destabilizing, I think, and that's a bigger kind of impact that we're watching in the near term anyways.
I mean, it's sort of, you're talking about maybe bond vigilantism, the way, I don't know, you think the way we saw in the UK, which obviously led to a very short tenure for Liz Truss. I mean, the U.S. has very different dynamics as the go-to and the reserve.
Yeah, so in that, I read that same Scotia note this morning. One thing they said that kind of stuck with me is that when Trump took over in 2016, inflation had been long dormant. That was almost the peak negative, or the peak trough, or the big trough in inflation. That was the bottom of it. And in his policy over the 4 years and then leading into the pandemic, which obviously was an extraneous event, kind of reignited that whole inflationary response in the economy, combined with the fiscal spending that started under Trump's first term and continued obviously through the pandemic. And so that is the question of we are no longer can just sort of stimulate without a drawback on the other side. We had a window kind of from 2012 through 2020 where that was possible. And so now, yeah, it's a good question. The biggest market in the world coming unhinged like the gilt market did and a couple of years ago, that would be a major development. But I think it's very interesting to see what the 10-year's done in the last sort of 6 weeks.
Are you prepared to position that way, though? Because it's been a tough market to fight against. If, going long the S&P 500 is the only trade in town.
Yeah. No, I mean, again, and we have been positioned against that, I would say. We've been holding some more cash. We also own a lot of defensive utilities, telecoms, infrastructure companies, which would be hurt in a rise in interest rates and have benefited from that drop in interest rates we saw over the last 12 months. So again, I keep saying to clients that I think some commodity exposure, some infrastructure and defensive exposure, and some cash right now is the best we can hope for into a very uncertain environment on a lot of fronts.